in India, having to deal with the decision of the government to withdraw 500 and 1,000 rupee notes, which was effective today morning. Both of them actually are contributing to volatility today. If you look at the Indian markets, we saw a low of market losing almost 1,600 points at one point of time. Right now it's trading, when the market ended, I think close to 340 points was lost. This is very similar to what's happening in other economies of the world: Japan, Europe, China. But the question that if we really would like to try and address is, what is the impact of this on the overall investment strategy? What should we be doing going forward? So if you really look at, I'm just starting by taking Donald Trump's victory in the US and its impact on Indian economy and investments. What we are expecting is a clear, move towards, anti-globalization policy making in the US. Now, while Donald Trump has been very vocal about it in the elections, in the election cycle, we don't know how much he'll be able to implement those policies. However, given the sentiment, what we expect is the precious metals, which are a great hedge against dollar, which are a great hedge against in any market uncertainty, will move upwards. And I think one of the key things that we have to really see now over the next, it's about 72 days. Donald Trump will take over as the president on Jan 20th. So there is going to be a lot of uncertainty during this period, especially regarding how policy making will happen, given that he doesn't come from a political, his kind of politics is very different, and he has come on a wave of anti-globalization thought process. So there is going to be a lot of uncertainty, and whenever there's uncertainty, you will see precious metals rallying, and we expect gold to rally. I think one of the, as we say in ArthaYantra, fairly regularly, it's always good to have a hedge, and in our portfolios today, we already have gold as a hedge. So that should support our portfolios right now. In addition, we also expect that the December Fed meeting in the US will really not take a decision on increasing or decreasing interest rates. That decision will be left to the Fed post Donald Trump takes over as the president, and that will actually create uncertainty in a different way. You could actually see money flowing out of emerging markets and into developed economies, safe haven economies. So you will see US dollar rallying against emerging currencies, while you will see US dollar falling against developed market currencies. And that's a trend that actually we see today already. This will also directly help gold prices and push gold upwards. What are the larger ramifications of this on global economies and India? There is a fear that potentially, given that the global economy is in a very precarious position, his election and potential policies could push the world into recession. And that is a possibility if you look at the world economies, if you look at China, you look at Russia, and various other countries, India, right? The economy that looks very fragile is China. There's a real estate bubble there, potential, and the bubble is waiting to be pricked. And the question that this is $1 million question: is Trump's election the the prick that the bubble needed? Is a question that we don't know. But if this is a prick, then you could see a cascading effect on China, and a real estate bubble could come crashing down, impacting the economy very negatively. So these two, this is just one scenario, and this could actually this would definitely push the world into a recession. And needless to say, we think that India will also be impacted. While this is a brief of how the world will look like because of Trump presidency, what is the impact of the 500 rupee and 1,000 rupee note withdrawal in India itself? We think it's a move that is fairly courageous and could have a very good long-term impact. There are obviously multiple ways of looking at it. A lot of people feel that this is not enough, but as a government, as a I think a financially progressive government which wants more taxpayers to come out in India and more taxpayers to really start paying taxes. This is a very important step forward. It's actually a very good signal to people that we expect our tax base, which is very, very low compared to our population, to further move upwards, which is a good sign for India in the long term. However, we also see short-term to medium-term impacts on sectors which rely on cash heavily. Real estate is one sector which will be impacted. Historically, when you look at real estate in India, the prices have really not followed the business cycle or the inflation cycle, partially because of the black money which always supported the prices. Builders were always able to hold off for a long period of time at the prices that they are comfortable with, just because they had ability to access cash. With this move, I think that disappears, and that will result in real estate prices across the country, both land and construction based real estate. The prices will come down, which is good for the consumer. We think per capita Indian real estate is one of the most expensive in the world, and that will change over the next couple of months and years. And real estate as a sector will take at least 12 months to really recover from this. It will also make real estate much more organized as we go forward. Similarly, other industries like jewelry, where a lot of cash is used, will also see negative impact of this. So while these two events really are happening, there is a push and a pull that's happening here. So let me explain that. So while gold will be pushed up uh, across the global markets, we could see demand for gold falling down because of lack of cash as an option. So, but we feel that overall the global economy will supersede what happens in India, and gold prices will be pushed up despite that. While the negative impact on emerging markets is something that is more or less given. I think what is more important is the level of volatility that will exist in the markets. Today, uh, the amount of volatility that we saw in the markets is an example of what could come tomorrow. But if you really look at the levels at which we are, the valuations in Indian markets, a lot of people might say that if the market falls further down, it's a buying opportunity. At ArthaYantra, obviously, we really don't look at timing of the market. We feel that it's very important to really look at volatility and try to address the issue of volatility, because from a behavior perspective, volatility drives irrational in financial decisions. So our portfolios were built to really withstand volatility. We will obviously come back to you in terms of how your particular portfolios are working. Given that we already have gold in our portfolio, that's a good hedge. Gold grew by about 3%. We expect the bonds also to perform not so well in the immediate short term. But that's again happening due to the push and pull. If you see a flight of capital from India, you will see bonds not performing. But if the flight of capital is contained enough, bonds should perform well, because the Indian government is giving a clear indication that their finances will be shored up by more taxpayers, which is good for the economy in the long run. I think one of the key questions that I think all our investors should really look at is, how do we handle the volatility? How do we take decisions at this time? Today, we are really not making any changes to the portfolio. I think we're very comfortable with the kind of risk versus reward profile we have. We get asked a lot of times, by customers, asking us, why do you have so much debt in the portfolio? Why can't you be more aggressive? Why gold? These are some of the common questions that we have always gotten. But I think these are some of the days which will remind us that good portfolios are made for bad days. In a good day, almost any portfolio will perform. But how a portfolio performs in a volatile day like this, really differentiates a good portfolio from really ordinary portfolios. Our effort at ArthaYantra has always been to really be prepared for these kind of days, where despite the volatility, despite the negative sentiments in the market, the volatility of our portfolios really should not push our customers to take decisions which are not financially prudent. And I think at a level we are succeeding in doing that. So, so from a perspective of individual calls on what you should do, um, uh, we continue to be bullish on gold. Gold will continue to rally, and gold will be part of the portfolios. As we go forward over the next couple of days and weeks, we'll continue to monitor the market, and we'll give a clear direction on what we should be doing. And right now, we are fairly comfortable at where we are. From a currency perspective, the rupee is expected to weaken because it's a combination of both what has happened in the US and in India, right? The interesting thing will be that'll play out is once on November 11th ATMs open again, what is the kind of liquidity that will be available? There are going to be liquidity issues in implementing such a massive effort in India, withdrawing almost 13 lakh crores of currency from the market is a very big challenge. I'm sure the government is prepared for it. We will see short-term logistical issues, but we could also see a short-term decrease in inflation because of lack of liquidity. And finally, I would really like to close by talking about the fear of anti-globalization that is there in the US and in Britain at a level through Brexit. We personally think at ArthaYantra that this could be a beginning of a shift towards emerging markets in Asia, who will slowly kind of take primacy. When in the 1980s, when Ronald Reagan and Margaret Thatcher started the whole globalization push, it benefited their economics immensely. The same globalization is actually, has benefited the Asian economies, and Asia today embraces globalization, while we are seeing some of the countries which are pioneers in globalization trying to push back on globalization. And to me, that really will not play out the way anti-globalization, activists think. Why am I, really talking about this? I hear a lot of people talking about sectoral plays like IT and pharma being hit because of what is happening in US. To me, really, that's really a short-term sentiment thought process. In real value, I think the criticality of say IT or a pharma sector to the US is immense. Even today, US is not in a position to really hire or fill all their IT jobs, and so outsourcing really will not be impacted. Yes, we need to calibrate or recalibrate ourselves as companies to fit the requirements of the new government, but on the ground, from a stock perspective, short term, we really don't see much of a difference. If the company has good fundamentals, I think markets will reward them, and markets will reward investors who are long term. With this, I would like to close and take a couple of the questions that we've been getting. So the first question that we have was the question of what will happen to precious metals. What is the outlook for precious metals? Precious metals will do extremely well. Precious metals thrive when there is uncertainty. Today in India, we saw almost a 900 rupee jump in gold. We expect this to continue as long as the uncertainty stays, and the uncertainty could be there for at least a couple of months till the Republicans take the White House. So we are bullish about precious metals. Does it mean that we should increase our exposure to precious metals? No, I think the current levels at which we are holding the precious metals in the asset allocation will continue to be a good hedge for us against the uncertainty, against how other asset classes are performing, and we are very comfortable in that position. The second question that we have is, what is the impact of what has happened on bonds, long term and short term? Again, there are multiple things at play here, and how these things fall into place or fit in uh, uh, is a question. If you look at it from, say, for example, just take the U.S. What is happening in the U.S. Say, for example, the interest rates don't go up for now, and uncertainty goes down fairly quickly from here. What would really happen is that we'll not see any flight of capital from emerging markets, and the bond markets would continue to perform well. Uh, but in case interest rates go up, you could see a flight of capital. Similarly, you add the other layer of the Indian government's decision of removing these notes. In the long term, it's a good thing for the bond markets, because uh, at the end of the day, if you look at the bond markets, we are looking at uh, the bond market is about lending money to corporates or government and getting a coupon rate. And when you have a government which is the biggest receiver of bond market funds, paying a coupon and saying that my income will become better because I have more taxpayers in my tax basket, that bodes very well for the bond market in the long term. So for now, we really are not recommending any change in the strategy of what we should be doing in the bond market. I think we have to wait and see what happens. But there's a lot of things at play here, and uh, a decision on what has to be done will be taken over when maybe the next few weeks, depending on how things become clearer for all of us in India and globally. So the next question I have is, what are some areas where good investment opportunities have suddenly opened? See, I think from a equity perspective, if you really look at it, some of the people were worried about the valuations that the stocks had. With this, I'm sure some of those stocks which you previously thought were more valued than they should be, could present an opportunity to be able to buy. But the way I really look at this is that I think when most people people who've really got great returns in markets are people who are able to ride these ups and downs. And right now, I do feel that we are in a position where we could see a further slide in the markets in terms of value, and that'll open up opportunities in terms of investing in equity, investing in even bonds for that matter, or investing more in gold. So if you want to actually add to your portfolio, so for example, you've been doing a 1 lakh rupee SIP, or you could top it up right now, and the rupee cost averaging will help you because of the lower prices that we have now. Overall, I think one thing is very clear. With the announcement of the Indian government, the intent is very clear here that India's growth is being looked at very strategically. I think one of the key things when you talk about fiscal policy or right reforms is the tax base, and why government is directly attacking that problem. And to me, that's a very positive sign for us, and positive sign for the intent of the government to really push reform. So overall, we are bullish about equity in the long term. And since all of you are investing for long term, all of you are looking at goals that need to be fulfilled. I think as you continue to invest in a disciplined way on a month-on-month basis, you will automatically ride on the wave and discover the opportunities. How bullish are you on gold? And the next question is, how bullish are you on gold? At what levels will it correct? I think what levels will it correct is a question that it's a very tough question to really answer. But given the uncertainty that exists in the world today, in terms of policy decision making, in terms of how things move forward, it's very similar to what was there in 1984, where the whole before 1984. the world's governments were mostly socialist-driven thought process. After 1984, we saw a globalization thought process come in and generate a lot of wealth. So will that last with this move, with this, with Trump coming to power and with Brexit, combining all these things, the increase in vote share of ultra right in Europe, across Europe, right? With this, the question is, will globalization recede and something else come in its place? Is a question that we don't know. And in these kinds of times, you will tend to see gold will do extremely well. But I would caution you against, taking any investment decisions or taking excessive exposure, because gold tends to be very volatile, just like, the situations it is that we are in. What happens to bank stocks is the next question. I think you will see, I think that there are so many factors that go into bank stocks, right? One thing that you have to remember is, yes, this whole, you know, withdrawal will cost them a lot of money in terms of operations, but the person who, or the entity which is taking the biggest hit is RBI. RBI has spent about 12,000 crores to really print all these new notes, which will be coming out on 11th. So, so the banks will take an operational hit for now, but I think the whole move, and if you really look at it from a macro perspective, what the government wants is to really ask, citizens to move away from cash and into electronic format. And once money moves into electronic format in terms of transactions, it's going to be good for the banks overall. In each individual bank is different. They have the issue of in India we have the issue of NPAs, which is a big issue, because if you look at the top leaders chart across the world, we are placed about 4th or 5th in terms of NPAs, which is a bad place to be. And the countries above us are like countries like Pakistan, Greece. So it's not a great company to be in. So from that perspective, banks will be negative, but you see more and more, citizens moving to an electronic format of transactions. You will see bank actually gaining from that. And I think obviously the private banks are more ready for something like this than the government banks. So time will tell how we move forward. The next question that we have is that what would be the right time frame to sell gold in order to maximize profits? ArthaYantra's philosophy really doesn't look at it from this perspective. We really don't believe in timing the markets. Had we timed the markets, most probably we would not have put gold in your portfolio. We put gold in a portfolio right now because it made sense from a overall investing perspective. And to me, the way I really would look at it is, if you want to really play on gold and you're looking at a trading kind of a thought process, my worry with gold and or any metals actually in this world is the volatility. You could actually try to buy gold and hold it for a couple of weeks, but typically gold can be bought in two ways. One is through a mutual fund or ETF or futures, and frankly it's just too risky to buy futures because of the leverage that is there. You could end up really paying a lot of margin calls if gold moves downwards. You can buy ETF or mutual funds and hang on for maybe a couple of months. That's not a bad play right now. But overall, remember that your risk versus reward and the overall portfolio strategy has to be in place. I think time and again, if anything has been proved, and especially with what we've been able to do successfully, it's important to look at everything from a portfolio perspective. And once you do that, your ability to really get rewards over a long term increase dramatically. A lot of people try to play a wave and try to make calls and try to make money, and we really don't see many customers making money when they try to time and try to really maximize profits. I think a good portfolio is where you should start, and once you have that and you have enough disposable money to play on the waves, then I think you should you can hold gold for about 2 to 3 months. Next question that we have is, would you expect real estate market to get hit? Oh, absolutely. I think the real estate market is uh, going to go through a very rough patch in the next 12 to 18 months. And part of the reason is that, most, a lot of the transactions are in black money with this new, uh, order. What government has done is basically removed uh, all the crutches that they were standing on. And it's very difficult for real estate companies to capitalize themselves now only on white money, because substantial portion of what they do was with black money. And um, just and that's the reason why even real estate prices, if you really look at cycles and compare us to developed markets give a when the markets go down, real estate prices also go down. In India it happened, but over the last 4 or 5 years it's been very, very slow, and real estate developers have been able to kind of hold on to the pricing, hold on to the inventory without much of a problem. And largely the underpinning that uh, was black money, and it created these artificial bubbles. And with this removal, the market will get hit. I think the correction will happen, and it's very good for the customers. Our suggestion to all our customers right now is, as a philosophy always has been that, it's always good to pay the taxes, and because you tend to enjoy the benefits of whatever is left with you after that. We have customers, for example, today we were speaking to a customer who had sold his house a year ago, and he's stuck with about, 20 lakhs of cash, which he can't do much about. And that is not a great place to be. So be careful about the decisions you make. We are there to really support you in all these decisions. Please feel free to call your advisors and ask them what is the right thing to do, which will help you in the long term. One bad decision will wipe out all your profits. Please remember that. The next question that we have is, what is your valuation of real estate market? So I think I addressed that already. So if you have a follow-up question, please feel free to send it out in the chat. Should we invest in the ultra short-term bonds now, or should we wait? I think ultra short-term bonds are over a period of 60 days, and largely mostly commercial paper, CPs, and very short-term lending to corporates. We really don't see much of an issue in investing in them. Ultra short-term bonds are money markets, are considered, or liquid funds are considered fairly safe, and they're considered equivalent to cash. So right now we don't really see an issue in you investing into them. Next question is very specific: invest in Tata Group of companies or not? I think that's a call you have to take based on the company, on the strength of their balance sheet. And again, this is a classic example of how sentiment might, overrule what logic is. And when you're making investment decisions, I think what you hear in the news is what you should not be using to make a financial decision on. My suggestion is, if you're looking at investing in Tata Group of companies, look at which individual company are you looking at, what is the balance sheet strength of the company, how is it performing, and then I think you should be on on a good ground if you're doing it. But that said, given the news flow and the kind of conflict signals that are emanating from the group, it's always wise to really verify and see, look at what you want to do, what is the duration that you want to hold the companies for. If you are looking at it from a very short-term perspective, I would say maybe not. This is not the right time. But again, it's a very, very a call that you have to take based on individual companies and the balance sheet strength. So we don't have any other questions, and I hope we've been able to address some of or put on the table what we are thinking from our perspective. You can continue to if you feel that you have more questions that pop up in your mind later, please feel free to reach out to your advisors. You can also You can also drop a mail to research@arthayantra.com, and we'll be glad to answer your queries. I would like to close this call by saying that, uh, this is not a time for you to panic or take decisions just based on what is happening now. This is just a temporary phase, and it's going to pass. And once that happens, the market will give clear indications on which direction it's going, and that's when you should make your calls on what to do. And as always, ArthaYantra will be there to make those calls for you and help you, get to your goals. Thank you very much for your time, and I hope this